Yeah, thanks, Faizan. Good evening. On your line for a long time from its original scheduled, phone call time. We have with us the entire management team of Karnataka Bank, represented by Mr. Mahabaleshwara MS, the MD and CEO, and other senior members of the bank to discuss on their Q2FY21 results and business outlook. Without taking much of your time, I will hand over the call to the management team for their opening remarks, followed by the outlook on the business. Thank you, and over to you, sir.
Yeah, thank you, Alok, and thanks to all the investors and analysts who had shown keen interest in Karnataka Bank's phone call. I'm also extremely sorry I have to keep you waiting for about 30-35 minutes, which was beyond our control also, because of some COVID-19 related transmission related issues. But of course, there was no COVID-19 impact either on our bank or on our results, that let us be assured. I have been focusing more on the sustainable and consistent quarterly results. I'm very happy that we have been able to live up to our reputation. And I'm also very happy to share with you that this time Karnataka Bank had the proud privilege of flagging off of banking sector earnings, because we are the first bank to come out with the quarterly results, and other banks would also, I'm sure, would follow very shortly. This time you might have noticed that we have already incorporated our subsidiary, KBL Services Limited. So that being the case, we have both the standalone balance sheet as well as the consolidated balance sheet. However, there is no change because the subsidiary has not yet commenced its business, likely to commence its business during the Q3 of the current year, or at the most Q4. So this being the case, let me now, since our balance sheet, quarterly result is already uploaded to the stock exchanges, I can also share these information with you. The first and foremost is that the net profit of the bank has shown a growth of 12.77%. Corresponding this year, it is 119.44 crores for the quarter ended September. Last year, same quarter, it was 105.91 crores. So for the first 6 months, so September half year ended, it is at 315.82 crores. Whereas last September 2019, for the first 6 months, it was at 281.33 crores. So on the 6 month basis, it was 12.26% growth, and this particular quarter to quarter, it was 12.77%. You may be aware that last full year, our net profit was 431.78 crores for the full year, whereas for the half year during the current year, it is at 315.82%. Operating profit has also shown a growth of 21.04% this quarter compared to the last year September quarter, whereas for the first half year, it has shown a growth of 54.23%. Last September 2019, first 6 months, it was at 763.44, whereas the current year, it is 1,177.47 crores. Interest income, there is almost a same level. It is at 1,603.71 crores. Last year, it was 1,629. So a small decline of by 1.59%. Whereas we have been able to maintain the expenditure, interest expenditure, it has shown a decline of 9.03%. So last year, our interest expenditure was 1,130.92 crores during this quarter, and it has now come down to 1,028.84 crores. As a result, our NII, net interest income, during this particular quarter has grown up at a rate of 15.27%. That means the last September 2019 quarter ended, it was at 498.72 crores. Now it is at 574.87 crores. Of course, other income, trading profit, there is a good growth. Last September 2019, it was only 39.32 crores. This year, this quarter, it is 155.18 crores. So as a result, our other income also went up by 20.91%. Total income, it has gone up by just 1.64%, 1,902 crores versus 1,933.52 crores. Total expenditure we have been able to reduce by 3.75%. Last year it was 1,488.98 crores. This quarter it is only 1,433.09 crores. So expenditure is well maintained. Income level, it is maintained at the previous level. And of course, there is a trading profit advantage also. As a result of all these things, our net interest margin, which all along we have been hoping to take it to above 3%. So this quarter, it has reached a level of 3.08%. But for the first half year, it is at 2.99%. Last year during this quarter, NIM was at 2.82% as against 2.82%. Now it is at 3.02% for this quarter. But for the full half year, it is at 2.99% as against last year's 2.80%. Return on asset also improved to 0.56% during this quarter. Overall, for the first half year, it is at 0.75% as against the 0.70%. Return on equity also, current quarter it is at 7.45, but for the full half year, it is at 10.15% as against 9.59%. NPA, there is no much traction. Traction in the sense addition is very much limited. So as a result, our gross NPA is at 3.97% as against last year's 4.78. And March it was at 4.82 and June it was at 4.64. So now it is below 4%, it is at 3.97. We have been focusing more on furthering the balance sheet, strengthening the balance sheet and with accelerated provision and all. So as a result, our net NPA is now at 2.21%. This was an year back, that is as of September 2019, it was at 3.48%. And as at the year end, that is March 20, it was 3.08. And as of June 20, it was at 3.01. Now it is at 2.21%. Provision coverage ratio was one thing which has been engaging our attention. So you may be aware that as of March 20, we had taken it to a level of 64.70%. And as of June 20, we have further improved to 67.93%. And now, as of September 20, we have further consolidated the position. And now it is at an all-time high of 75.44%. So this is one area we have been focusing on since last 2 years. Now it is at 75.44%. Cost to income ratio has also almost stabilized at 44.68% as against the last September position of 46.41%. Of course, CRAR, it is at 13.08%. With the Tier 1 11.08 and Tier 2 2.00. This is excluding the current half-year net profit. So it's an academic interest if you add back that 315.82 crores of current year net profit, the CRAR would be at 13.68%. And of course, turnover, business turnover is 1,27,027 crores. With a growth rate of moderate growth of around 2.73%. Deposits also have shown a very nominal growth of 3.90% with 72,929 crores. Advances, if you look at the terminal figure, there is a muted growth of 1.18%. But you all know that we have been focusing more on the retail and mid-corporate advances. Retail is up to 9 crores. So in our case, the retail advances, that is up to 5 crores, not 9 crores, up to 5 crores. This particular book, the retail loan book of the bank, has recorded a year-on-year growth of 9%. And we have been also focusing more on the mid-corporate, that is a ticket size of 5 crores to 100 crores. This has given us a good growth of 15%. So, and my corporate book, that is above 100 crores, wherein our earning was also comparatively lower. So we have been focusing on reducing that exposure. So there is a degrowth of around 31%. So in the retail, the growth is at around 9%, mid-corporate 15%. So our realignment of the advances portfolio, that we have focusing, and I'm very confident that we'll be able to take it forward as well. CASA is one area which has been engaging our attention continuously. So the CASA share in that total deposit, it was at 27.41% about a year back. Now it has further improved to 29.17%. Yield on advances also, now it is at 9.40%. Cost of deposit has reduced considerably to 5.38% from 6.17% about a year back. So as a result, our interest spread, which was at 3.52% about a year back, has now further improved to 4.02%. So, and these are some of the performance highlights. And our moratorium book, which was at 51% as of June 2020, so there has been a very good impressive traction. And as on September, the moratorium book is reduced to 11.40%. And the majority of the recovery activities, it has started in the month of September only. So during this particular 1 month, there has been a very positive traction. So now it is at 11.4% of the loan book. I'm very confident that going forward, I think within another next 2 months, we should be, our confidence level is that we should be able to bring it to below 1% by December 20. And the other important development that has happened in the bank is we have been focusing on bringing strengthening our board also by bringing eminent personalities to the board. So about 2 months back, we have onboarded 2 new directors. One is Mr. Justice A.V. Chandrasekhar, who is the retired High Court Judge of Karnataka. He has joined our board. And another personality is Mr. Pradeep Kumar Panja, who is the former Managing Director of State Bank of India. So he has also joined our board. Today in our board meeting, Today also we have just examined another candidate, and I will disclose that with you very shortly. So it is with an intention to further strengthen the board. Regarding our KBL Vikas, the transformation exercise, so it is going on as per the schedule. So a lot of process improvement, all such things have already been done. Our loan sanction, we are now doing up to 5 crores. Majority of the products sanction, it is on the digital journey, and that is gaining the pace also. And some of the products like home loan, car loan, and salaried loan and all, around 70 to 75% of the daily sanctions under these loans are now covered under the digital journey. So that is the response that we are getting for this particular product. And we are having the festive season also. There is a credit related campaign as well as CASA campaign has also been initiated. So we will continue to focus more on the retail and mid corporates. Of course, going forward, definitely we should be able to protect our bottom line. Current year, I'm not focusing big on the bottom line. Top line. Top line may be at the same level. I'm not focusing for a big growth in the overall business, but definitely we will be able to continue our first 2 quarters performance as far as the bottom line and other financial parameters are concerned. So I'm looking forward for a sustainable and consistent third and fourth quarter. With this brief introduction, let me now answer your specific questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Mahrukh Adajania from Elara Capital. Please go ahead.
Yeah, hi, sir.
Hello, how are you?
Hello, sir. Good, sir. How are you?
Fine.
So, my first question was on your loan growth.
Ma'am, this is the operator. Sorry to interrupt you. May we request that you please increase the volume of your phone?
Please
Can you hear me now?
Yeah.
Can you hear me now?
I can hear you, but your voice is a little bit feeble.
Oh, okay. Now?
Yeah, better.
So my first question was that what is driving the mid-corporate growth? Which sectors in mid-corporates are seeking loans from you?
Yeah. See, this time, basically it is the MSME sector, ma'am. MSME sector, for us, it is in between 5 to 100 crores ticket size. So in the MSME alone, we have had a 17.02% growth. So that is one thing which is driving our mid-corporate. And as far as the retail sector is concerned, there is a very good traction under the gold loans. Under the gold loans, we have had a 23.97% growth. Of course, that was our priority area also. Followed by home loans, which has shown a traction of 13.81%. And of course, agriculture sector is doing well. You know, we have nearly 42% of our branches in the rural and semi-urban area. So there, since monsoon has been very good, and the activities at the field level, agricultural activities had also picked up. We have seen a growth of around 22.07% in the agricultural sector.
Okay, got it, sir.
Yeah,
but
and there was, you may be aware of the fact that government had also come out with guaranteed emergency credit line, GECL.
Correct.
So that also has shown a good traction.
Oh, so your MSME growth is largely driven by ECLGS, or you are treating that as separate?
Both.
Both. So non-ECLGS also and ECLGS also.
Yeah.
And so what were your disbursements under the ECLGS?
Under there around 1,600 crores.
Disbursement?
Yeah. Sanction was to the tune of around 1,750. Around 1,600 crores already stands disbursed.
Okay, sir. Thank you. Thanks a lot.
Welcome.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Deepak Mehta, individual investor. Please go ahead.
Yes. Hello. Good evening, sir. Thank you for taking my question.
Yeah. Hi, Deepak.
Yes, sir. So my question is around digital banking. So what is the strategy and what is the development on digital banking side?
Thank you very much for raising the very pertaining question. Digital banking is gaining very, very impressive traction. It was my dream to take it to a level of 90% of our transaction under the digital transaction. We are very nearer to that. So as of September 2020, our digital transactions has reached a level of 88.36%. So now only around less than 12% of the daily transactions are happening through the branch channel. Around more than 88% is now happening through the digital channel. Most probably by December end, we should be able to reach our dream figure of 90%.
Okay, sir. Okay. So this will indirectly
And, not only this services, that is the IB and mobile banking, we have also started digital lending also. So onboarding of the customers through our website. That is what I said, the digital loan sanction journey. So that is getting very good momentum. So that has helped me to improve the efficiency of the loan delivery system as well as my own staff efficiency to a great extent. And our underwriting, loan underwriting capabilities have also improved manifold. So those are all the natural advantages of the transformation exercise.
Okay, thank you, sir.
Welcome.
And my second question is around the consolidation in the private sector banking. So is there any talk or any interest for some other large banks for acquiring or maybe buying this?
As of now, no such things. As of now, no such things.
Okay.
We are on our own, and as I said, we are committed for our identity, and we will continue to focus on all the fundamental parameters which would give the required strength to Karnataka Bank.
Okay. So suppose in case if we get any interest, so either then also we will, as a group, we are not interested.
As I said, this is our stated policy. We will continue to focus on our identity.
Okay, okay. And for rest of the year, sir, how you see the advances and loan growth?
Yeah, advances, that is what I said. The top line growth may not be there, but we are in the process of realigning our portfolio. So we will continue to focus on the retail advances as well as the mid-corporates. There in the retail advances, I am confident of having an 8% plus growth. And in the mid-corporates, we are focusing on about 15% plus growth. But it may not translate into the overall advances improvement, but because there may be some reduction in the corporate advances also. So that is what we have been focusing for the current year.
Okay, thank you, sir.
Yeah.
I will get in the queue.
Sure.
Thank you, sir.
Thank you. The next question is from the line of Naishi Shah from Echo. Please go ahead.
Hi, sir. Thank you for the call. So I just wanted to know regarding the collection efficiencies that you all have seen over the last few months, because you said that, the recovery has picked up more in September. So what would be the collection efficiency as on September end?
Collection efficiency, it all started during September and September 1st. So to begin with, we were focusing on our moratorium book. So as I said, the moratorium book of our bank as of June, it was at 51% of the total loan book. So now September, there has been very good recovery as far as the September these dues are concerned. So as a result, not only in this morat book, but also other general advances also, it has reached an efficiency level. If you want to quantify it, I think it could be around 70 to 75%. But October also we are seeing very good traction in the collection also. So yes, COVID-19, I'm not saying we have totally withered away that impact. We are very cautious and very carefully navigating through this situation. So I think October and November, if you are able to sustain this collection efficiency, what we have seen in September, I think that is why I am very confident that by December end, in this morat book itself, we will be having less than 1% exposure.
Okay, sir. So another follow-up.
Very positive signs are there from the field level.
Okay, great, sir. So another question. What is the state of the bank in terms of its liquidity and ALM position for the next 1 year or the next 3 months?
Would you like to answer?
No,
1 minute. I would request my COO, Mr. Balchandra, to address this issue.
Bank is closely monitoring the liquidity position. From the beginning of this financial year, we are in fact having adequate liquidity. If you are comparing our LCR rate, etc., it is more than 250%. Even the actual liquidity in the system also, it is very, very comfortable. Going forward also, we are not foreseeing any stress in terms of the liquidity.
Okay. Thank you, sir.
Liquidity and all, it is also being very closely observed by monitored by the regulator also. So you may be aware that earlier it was at 100% LCR.
Yes, sir.
Liquidity coverage ratio.
Yeah.
They had then, on account of COVID, they had reduced it to 80%. So we are at a very comfortable LCR position. Liquidity is not an issue.
तुम्ही ज्या व्यक्तीशी बोलत आहात त्याने तुमच्या कॉलला होल्डवर ठेवला आहे.
So please go ahead.
Thank you, sir.
Yeah. Yeah. Hello.
So please go ahead. Yeah.
Yeah. Any other questions? Hello. Any other question?
Mr. Shah, do
No,
you have
that's
any-
it. That's it.
Okay.
That's it. Thank you so much, sir.
Yeah. Next question.
Thank you. The next question is from the line of Yashwant, retail investor. Please go ahead.
Yeah, hi, Mahabaleshwar.
Yeah. Good evening, Mr. Yashwant.
Good evening. So it's good that we could see that the moratorium has come down to 11%.
Yeah.
from
Great
21%.
relief for us also.
Right. And out of that, I would
But we
want
cannot
to
relax now.
exactly. That's where my
We
question
have to
is.
be on our toes.
Yeah. I mean, are there any restructuring of loans which have happened in the month of September?
Yeah. September, our restructured loan book, it has gone up by around 43 crores compared to June. Our restructured advances was 601.23 crores as of June. Now it is at 644.57 crores. So this under the OTR of Reserve Bank of India, we are evaluating the position. So their MSME restructure is permitted up to March 21. Other advances, we have to identify the accounts which are below 30 DPDs, 30 days past due. They are eligible. So we are identifying those accounts and they have to be restructured by December 2021. I mean December 2020, not 21. Yeah.
Okay.
So we are in the process of identifying those eligible accounts, and we will thereafter immediately we will contact the respective borrowers and we will take up that exercise.
Okay. Yeah, and my next question is with respect to the QIP. So I mean, you have mentioned that this particular financial year, there would be moderate growth on the top line. So will there be any need of a QIP in that case?
Sir, we are evaluating that. See, since the top line growth would be muted and the fresh credit exposure, you might have seen the RBI announcement also. They have further eased this risk-weighted assets. They have linked it to the LTV and other things. So that will have a favorable impact on the risk-weighted assets and eventually on the capital adequacy ratio also. So that is why we are continuously evaluating it. So as of now, our capital adequacy ratio stands at 13.08%. So internally, we have a policy of maintaining at least 1% over and above the regulatory capital. So this is well above that now. And if you add back the current year's half-yearly profit of 315.82 crores, this is a notional number I am sharing with you. The capital adequacy ratio would further improve to 13.68%. So going forward, because the QAP validity is up to March 21, so we will be now immediately our Risk and Capital Management Committee of the board will also meet, and they will reassess the risk-weighted assets as well as the projections for the current year, and also the morat book impact, and also the OTR related impact. Everything will be discussed threadbare, and I will be approaching my board, and if there are any possibility of further capital, we will take a call. As of now, I'm comfortable with the present capital adequacy ratio. And all along, if you look at the 3 years, 10 years history of Karnataka Bank, all along we have been able to maintain a capital adequacy ratio varying from 12% to 13.33%. So last year, as I said, March 20, it was 12.66. Prior to that, it was 13.17% capital adequacy ratio. And March 18, 12.04. March 17, 13.30. Then prior to that, 12.03, 12.41, 13.20, 13.22, 12.84, 13.33. So 12 to 13% is generally we have been maintaining. We are continuously evaluating it, sir. We will take a call. That is what also, yeah. Growth-oriented capital may not be required, but anyhow, we are continuously evaluating.
Okay. And last question, which pretty much every investor is worried about the share price. And I have heard in the previous call also, even you have mentioned that you are depressed because of the share price not going up. So, I see that every alternate year, they are either issuing shares to raise the capital, and with respect to bonus shares, it could be rights, everything, right? So, is there any plan of buyback of shares?
No, as of now, no such proposal is there. See, my responsibility basically is to keep on strengthening the fundamentals and also reach out to the good investors like you as well as the institutional investors with the correct position about the bank. So if you look at all the last consistently, my predecessor during Mr. Jairam's period as well as during the last 3.5 years, my period also, we have been focusing on that. And I was also sharing this capital adequacy ratio for the last 10 years. And if you look at even the NIM also, of course, it varied from 2.15% to 2.84%, 2.93%. Now it has reached a level of 3.08%. I think what are all the market expectations from the fundamentals point of view? A NIM of about 3%, return on asset, now it is at 0.75%. Going forward, definitely it will reach 1%. ROE of around 12% plus, and a very qualitative credit portfolio, and a very comfortable provision coverage ratio, and cost to income ratio. I think all those things we are in the process of having our own new benchmark. So that we will continue to focus, and I am sure this good performance will be definitely taken note of by the stock market. I am now optimistic. I am not depressed.
Thank you. Mr. Yashwant, may we request that you return to the question queue for follow-up questions, as there are several participants waiting for their turn. We'll take the next question from the line of Nikhil Rungta from Nippon India Mutual Fund. Please go ahead.
Yeah, hi sir. Thanks for the opportunity.
Yeah, good evening, Nikhil.
Good evening, sir. Sir, in the last call, you had given moratorium breakup based on the sector as well, like agri, corporate, MSME, and retail. Can you just give how would be the moratorium percentage in these respective things?
This time, last year, since that figure was substantial, I thought of giving the breakup. Now it has already come down to 11%. So that is why we may not share the breakup overall. And as I said, going forward also it would come down.
So average would be in the range of 10 to 15 across all 3-4 sectors. Can I presume that?
Below that, I think there is no other individual sector which would have more than 15%. No other sector. Definitely you can presume like that.
Okay. And sir, what would be our moratorium? Basically, what I want to know is in the retail segment on the moratorium side, what's the feedback which we are getting from the customer? I mean, is it because they want to hold more cash and hence they have taken moratorium or unable to pay right now? Or there is a genuine difficulty why they cannot repay right now?
All the reasons, all the three, whatever that you had, it is there. So what I did is I have asked my field level functionary to educate the customers on the moratorium as well as its cost burden. So that has helped customers to understand the impact of the moratorium on the cost. And there has been a positive traction on account of this educative sort of initiatives that is taken by the bank. See, no doubt we will be extending it the loan period by 6 to 10 months, or in some cases even up to 15 months, all such things because of the moratorium. But there will be, it comes with an additional cost. So by and large, those who are all cost conscious and are capable of making good of this, they have responded for that positively.
Okay. And sir, lastly on this moratorium thing, you have already indicated that this 11% you expect it to bring down to 1% rot level by December itself. So this would be primarily through recovery, you think it will come down to 1%, or you believe that there would be slippages from the same as well?
Slippage could be there. See, my assessment is that for December quarter, there could be delinquency or slippage to an extent of 0.5 to 0.6% of our loan book, including from the moratorium book as well. Because now itself, for September quarter, there was a slippage of around 90 crores, which we could not mark it because of the Supreme Court, this pending writ petition at the Supreme Court. Anyhow, what we have done is internally, yes, we have identified those accounts. Once the court gives a mandate on that particular thing, we will be marking it. But I have already provided I have already started providing as per the IRAC norms for that. So that even if this 90 crores, if it becomes NPA by December, there will not be any hit on the profit and loss account. That much care we have taken while finalizing the September balance sheet.
Okay. Sure, sir. That's all from my side. Thank you.
Welcome.
Thank you. The next question is from the line of Parameswaran from Jefferies. Please go ahead.
Hello. Hi, sir. Am I audible?
Yeah.
Yes, you're audible. Yeah. So my question is, you said that the moratorium book is at 11% as of September. So what do you mean by that? Because the moratorium ended in August.
Yeah, September recovery we have accounted for in all those accounts who had availed the moratorium benefit.
So sorry to interrupt you. This is the operator. Mr. Parameswaran, there's a sound coming.
Yeah.
Thank you.
If there is a recovery in that morat book during the September, so then, or if there is no recovery, we have treated it as continuing. If there is a recovery as per the original repayment schedule, we have treated it as it has started servicing the dues.
Okay. So if you could help us, what was the morat book as of August, and it has become 11% now. So what was the morat book as of August in percentage?
The highest was of June. Then gradually it has started declining, but significant decline we have seen in the month of September. The same trend is continuing in the month of October as well.
So this 30% becoming 11% is entirely repayment?
Yes, definitely. Repayment has to be there. Otherwise, no question of treating it as out of moratorium.
And this 11%, you have not got any repayments at all since the beginning of moratorium?
11.4% of the total loan book. So that we are expecting during this month and the next month as well. So our recovery hubs at the respective regional office level, they have already started contacting all these borrowers, and there is a positive response from them also.
Okay, sir. Thank you.
Thank you. The next question is from the line of Ojasvi Kicha from TCG Asset Management. Please go ahead.
Yeah, hi. Am I audible?
Yes, sir. Please.
Okay. So in last quarter call, you mentioned about certain NPA cases which was recognized on a proactive basis, about 160, 170 odd crore, primarily because of COVID reasons. So if you could update on the progress of those accounts, and also is there any addition to that pool?
For that book, during the current quarter, there is no addition. And recovery is happening. In fact, in one account, we have been able to recover about 42 crores cash recovery. So resolutions are happening. So most probably we should be able to, because almost all those.
Ladies and gentlemen, the line for the management has got disconnected. Please hold while we reconnect them. Thank you. Ladies and gentlemen, thank you for patiently waiting. The line for the management is reconnected. Thank you, and over to you, sir.
Yeah. See, recovery in all the accounts, not only those accounts, but even in other accounts also, it is happening. We have been focusing on the recovery of NPA and also even the technical write-off accounts. In fact, in that technical write-off book also, during this particular quarter, that is the second quarter, we have been able to recover about 23 crores. Last year, corresponding quarter, it was 18 crores. And this year, the NPA recovery, excluding this technical write-off, the cash recovery itself is 156 crores. Whereas last year, corresponding quarter, it was 146 crores. We were thinking that because of the COVID-19 and all, the resolution of the NPAs, mainly in terms of the recovery and all, would get affected. But the figures are telling the other story. So those, of course, we are continuously contacting all these NPA borrowers also, understanding their position, financial position, and also their willingness to repay the loans and all. So, and a good number of borrowers, I should say that they have come forward for OTS. So that is the silver line in the recovery front.
Okay. And second question is on provisioning coverage. What is, your internal target? Where do you want it to, take it by end of this fiscal year?
Yeah, there were two issues. All along, of course, this was the pet question of all the investors as well as the analysts. All along, we were having a PCR of ranging from 52 to 59%. That was mainly on because we were strictly going as per the IRAC norms. We were not focusing on accelerated provision. So since last 2 years, we thought that yes, we will go for the accelerated provision also. And this is, as a result, our provision coverage ratio, as of March, it has improved to 64.70%. Now, as I said, it is at an all-time high of 75.44%. My and my team, including my CFO and Treasury and Accounts team who are responsible for balance sheet preparation and all, we are confident that by March end, by March 21, we should be able to figure out our bank in one among those banks who have a PCR of more than 80%.
Got it. Okay, one last question on restructuring itself. I believe earlier during the call you mentioned restructured advances by value is about 644 crore, right?
Yes.
So, my question is, was that specific to only MSME sector, or was it the, overall, on the overall book?
It was from MSME sector only. Yeah.
OTR, what is there in the COVID relief?
Yeah, that is yet to be. See, RBI has announced OTR, one-time restructuring. That is yet to be given effect. So this is from the MSME structure portfolio one.
Understood. Anything on corporate, sir? Any proposal, restructuring proposals that you have received or under evaluation on the corporate?
Two proposals I am expecting to an extent of around 500 crores.
Okay, put together, right?
The banking sector is aware of those two accounts. So we are also expecting about two proposals only.
Understood. This was useful, sir. Thank you.
Thank you. The next question is from the line of Bhavik Shah from B&K Securities. Please go ahead.
Hi, sir.
Mr. Shah, good evening.
Good evening, sir. So thanks for the opportunity.
Thank you.
Sir, I have two questions, sir. So, of the 11% of the loans who have not paid since lockdown, how much do you expect them to be to come from restructuring?
Out of that, about 2% may come to the restructuring. What I am expecting is that 11% is engaging our continuous attention. So we are identifying the accounts also. Not more than 2% may opt for OTR.
Okay. And sir, you mentioned that slippages would be around 0.6% for fourth quarter. So sir, you expect the other 8 to 9% of the loans from that 11% to normalize over the period of next 2 quarters?
Yes.
Okay. And sir, those two, so you mentioned about two industries where, two accounts where restructuring proposal has already come to you was 500 crores. So can you name the sectors?
One is trading, another one is...
So is it the East-based group?
Pardon?
Is it the East-based group or trading?
No, not from that group. One is from the trading, another one is from infra.
Okay. And sir, so with respect to the OTS scheme, so has there been a change of haircut pre-COVID and now?
I didn't get your question, Mr. Shah.
So in one-time settlement schemes?
Not settlement, one-time restructuring.
Yes, sir, I understand that. But sir, you mentioned that there have been recoveries to OTS also.
No, that OTS is different. That OTS I referred is pertaining to my NPA portfolio and the technically written off portfolio. Write-off portfolio will be there, no?
Yes, sir.
That is what I was referring. In that write-off portfolio, we have been able to recover about 22.71 crores. NPA, also there is OTS, one-time settlement.
Mm-hmm.
As a result, we have been able to recover about 156 crores under the NPA alone.
Okay. Okay. So thanks a lot. That's it from me.
Now, what I was highlighting is that even during the COVID-19, NPA recovery is very much on the track.
Yes, sir. But so there must be a difference in the amount of haircut, right? Pre-COVID.
No. Here what happens, these are all, as I said, about 93% of my loan book is fully secured. When the security is there, especially for those secured assets in the non-corporate sector, the haircut would be very minimal.
Okay. And sir, one last question. So with respect to the RBI dispensation on reducing the risk weight for home loans, so to what extent, on a ballpark figure, would that release our CET1?
No, there what happens, these are the exemption given for the advances, fresh advances that we are making effective from 1st of October. That reduction is not applicable for the existing loan book.
Okay.
Yeah. So that all depends on what would be our growth in that particular sector. It depends on that, like that. Not for the existing loan book.
Okay, and sir, just 2-3 data points because the PCT isn't out yet. So can you just give me the treasury gains amount, slippages, upgrades and write-off?
Yeah, treasury, yeah, as I said, this time it is 155.18 crores.
Okay.
As compared to 39.32 crores as of September 2019.
Okay. So slippage, recovery and write-offs during the quarter?
Recovery is this is from the NPA portfolio.
Yes,
Recovery is 156.03 crores, and the technical write-off is 171.64 crores.
Okay. And the slippage?
No, slippage is very, very minimum, 3.97 crores only.
Okay.
Yeah.
Thanks a lot, sir.
Yeah.
Thank you.
Good day.
The next question is from the line of Himanshu Upadhyay from PGIM India. Please go ahead.
Yeah, Alok, shall we have one or two last questions and conclude by 5:30? Mr. Alok?
Yes, sir, we can do that. We'll take up.
I will take another one or two questions.
Sure.
We'll take the next question from the line of Himanshu Upadhyay from PGIM India. Please go ahead.
Yeah, hi. Good evening.
Yeah, good evening.
And congratulations on decent results or good results, it seems.
Thank you so much. It
And,
has been a very most difficult situation. That is why it is very special for all of us.
Yeah. I agree.
Yeah.
There are 2-3 things which I wanted to understand.
Yeah.
One is on the fee income, okay? I missed some initial part, but when we look at our fee income, the fall in this quarter is much higher than last quarter or YOY.
Yeah.
What would be the specific reason and what are the components where the fall has been sharper and what is the outlook on this?
Yeah, fee income, two things has affected. One is, as you have seen, the overall loan book growth is not there. That is also one of the reasons. But the second is one where the customers also have resorted for maximum concession, which we have also considered sympathetically. So that is why there has been some degrowth in the fee book. And going forward, I think it will settle down. The second most important thing is from our ATM transaction for the first 3 months, all the ATM transactions were made free because of the COVID-19. And that has also adversely affected the fee income. But that was a very special situation. So as I said, we have been able to make good of that by in other areas. You see, our interest expenses have come down very significantly. So these are some of the things wherein we have considered sympathetically to. For 4 months we have
Yeah. And one more question was on the net interest margin, which is pretty high or good, I would say. So we have seen cost of deposits also fall down. Do you think the situation or the numbers can remain like this on the net interest margin? And one of the things was there was a lot of churn of the clients also from one place to the other, okay? And NBFCs or others would drop the rate and take the client. Is the situation continuing, or you think the higher net interest margin is because of lower customer churn also, and you are able to get better terms? How are you looking at the...
Yeah, I got your point. NIM would, I think it would stabilize at slightly above 3%. That is for the entire year as such. And the cost of deposit, of course, this particular quarter, it has come down to 5.38. But for the first 6 months, it is at 5.54. And going forward, it will further come down because we have further slashed the interest rate because of our comfortable liquidity. And for the next 6 months, I am not foreseeing any significant increase in the cost of deposit. And there could be slight decrease in the yield on advance, but most probably, as I said, we should be hold on to a spread of 4%. So I think Yeah, and as I said, we will be focusing more on CASA also. That would also help us in further reducing the cost of deposit as well. And the churn of the customers, especially from the NBFC and all. Now what happened, that underwriting the procedure or the process, because almost all have adopted almost the same procedure of looking into the bureau score, their past track record, analysis of their own bank statement, all such things. So that being the case, my observation at the field level is customers would like to stick on to the bank, which they have been dealing for quite long period. And another good thing that is happening at the field level is because of consolidation of the nationalized banks. We are getting some very good customers from other bank as such. So that is one of the reasons why I said there is a very good traction in the mid corporates between 5 crores to 100 crores ticket size. These are some of the well-established clients of other banks also because of the service level and other things. They have preferred a bank with an established track record in the service, customer service and other related things. So
one last question. The deposits have grown by 4% and our, I would say, CASA has also improved, okay? But we are not able to see the exact presentation or it is. Can you share what is the growth on the CASA and term deposits and the breakup between them in last year?
Yeah, CASA, our CASA growth is 10.56% growth rate. And the CASA share, it has improved to 29.17%. Earlier it was at 27.41%. We will upload our detailed presentation to our website shortly.
Okay. And do you think that the traction of growth on CASA will remain here because that
is what I said.
Advances would be lower growth this year, so CASA will improve further here?
Yeah, that's what I said. I am aiming for a 30% CASA share by March 21. All our actions are focused on that. Let us see, because in the first half year, we have been fairly successful in that journey. And I am confident that during the second half also, because the first half was affected by COVID, second half, let us say, there will be a lot of relaxations and all. And we have had a tab-based SB accounts onboarding activity, and I have a dedicated CASA marketing officers team across India. In each of the region, there is a CASA regional sales executive. So these infrastructure we have now put in. So we should be able to encash that opportunity.
Okay. Thank you from my side, sir.
Welcome.
We'll wait for the presentation.
Yes, sure.
Thank you. The next question is from the line of Girish Raj.
Let me see the last question. Hello?
Yes, sir.
Yeah.
From the line of Girish Raj from SL Mutual Fund, please go ahead. Mr. Girish Raj, your line is in talk mode. Please go ahead with your question. Mr. Girish Raj, please unmute your line from your side if muted. As there is no response from the current participant, I have muted the line. We'll take the last question from the line of Gaurav Jani from Centrum Broking. Please go ahead.
Thank you for taking my question, sir. Congrats on a good set of numbers.
Yeah.
Good evening, sir. Good evening. So just wanted some clarity on the moratorium portfolio. So are we to understand that the number that has come down from 51 to 11%? So these customers would have started paying one EMI in September, and that is how we have classified from 51 to 11%.
Yeah,
just
perfectly correct.
Sure. And sir, in terms of treasury, if I may ask you, for the second half, any sort of unutilized treasury gain portfolio we are sitting on, or this is what we have maximum recognized for the full year?
It is there. It all also depending on the yield movement as well. So if an opportunity exists, then we may further gain this. Otherwise, we cannot predict. Treasury is income, especially this trading profit also. Fortunately, since last 1 year, we have been very successful. We are keeping our fingers crossed.
Sure. And sir, last question from mine. This quarter, have we made any additional provisions basis COVID, or this was only NPA provision?
Not to the COVID, but NPA, I have made some accelerated provision also.
Sure. Thank you for taking my question. That's it from me.
Related the 97 crores provision which we had as of June, that we have kept intact.
Sure. Okay. Thank you.
Thank you. Ladies and gentlemen, due to time constraint, we'll take that as a last question. I would now like to hand the conference over to Mr. Alok Shah for closing comments.
Sir, you have any closing comments?
Yeah.
Sir?
While during my opening remarks, I was referring to our efforts in strengthening the board of our bank. So today, our board, on the recommendation of the NRC, has been very pleased to induct one more additional director under the independent category. She is Madam Uma Shankar. She would be joining our board effective from 1st of November 2020. She is the former executive director of Reserve Bank of India. So she would be joining our bank. She is a retired executive director from Reserve Bank of India. She is presently residing at Bengaluru, and we are pleased to have her on our board effective from 1st of November. With that, our board would be having somewhere around 82% as independent directors and 2 women directors as against the minimum requirement of 1. So this is one thing which I would like to share with you all. Thank you one and all for having evinced a keen interest. Let us keep meeting, so either personally or through WebEx, whatever it may be, and wish you all hale and healthy life, as well as all the best to each one of you. Thank you.
Yeah. Thank you, sir. On behalf of Monarch Network, we thank you.